Good afternoon, everybody. I see some familiar faces. Great to see you all. I really appreciate the GTApreneur community. I am growing to learn lots about the community. So I've been attending monthly events since November last year and really enjoying it. So that's a bit about myself and my experience with GTApreneurs. I would ask. Actually, I'll tell you a bit more about myself. So LMN Accounting Solutions is 10 years old, actually 11, almost 11 years old. Last year we celebrated our 10-year anniversary. And the bulk of the work we do is bookkeeping, but from there comes so much like payroll, sales tax, consulting, right up to filing year-end with CRA for not-for-profits, corporations, and sole proprietorships as well. So I'm going to share my screen and jump into it. So a lot of people think I'm going to talk about taxes, and I kind of am. And really it's timely considering that we are, in the thick of tax season right now. But as important as taxes are, for especially small business owners, I would like to back up a bit and talk about what is important before you even get to taxes. Like, how do you even know what your taxable income is? And so even though spring is, or early spring is technically tax season, I like to consider the rest of the year as tax planning season, which I find is even more important, and we'll get to that. So a bit more about myself. I've already spoken about myself. We're going to get into tax. What is tax planning really? How do we do it? And really the thick of the presentation is the reporting, what we do there, and then we'll get into conclusion and questions afterward. So, here's a picture of me. As I mentioned, business is 10 years old. What do I like to do? I'm a drummer myself. I like to play basketball. I'm into fitness. However, this list is kind of a little bit dated because as I get older, I'm realizing that even though I can keep up with kids who are half my age, I shouldn't, because I really feel it for a week after. So really, what is tax planning? Tax planning is the analysis of a financial situation or planning to ensure that all elements work together to pay the lowest possible tax balance. Now, really, what does that mean? Now, at some point, you can unmute yourself because I am going to ask some questions just so that I can get your feedback because I know everyone's on mute, so it seems a bit too quiet. But what do we do? What do we do for tax planning? And really, it is reviewing your reports regularly throughout the year. I suggest at least 3 times so that you are able to A, prepare for your tax balance in advance so you know what it is, or make necessary adjustments to reduce or eliminate the tax balance owing. And really the crux or the meat and potatoes of the presentation is really how important bookkeeping is, because you can't have this conversation unless your bookkeeping is up to date. And I really love these quotes at the bottom of the screen here. Waiting until spring to start thinking about taxes could cost you thousands of dollars. Now, considerations for tax planning includes, timing of income, amount of income throughout the year, long-term versus short-term planning, cash flow, needs and goals, corporate versus personal age. There are a number of factors. Another quote I love from Robert Kiyosaki: "It's not how much money you make that matters. It's more about how much money you keep and for how long." Now, other things to consider, if you're an individual, now I know we're all business owners, so we're not going to spend too much time here. But what type of income do you have, whether it be dividends, employment? If you're a sole proprietor, your income is the 2125 on your T1. And we're not going to spend too much time here because that's more for an individual with employment income. If you're a senior, we're all going to get there one day. What type of income do you have? Whether it be dividends, investments, if you're still working, employment, salary, commission, capital gains, or rental income, depending on what type of investments you may have, and still sole proprietorship or T4A if you are still, doing some sole proprietorship work or as a subcontractor. It's important to consider what type of income you have. Now, here we go into sole proprietorships. Now, really, again, the importance of tax planning, the importance of tax planning really stresses the importance of bookkeeping. And we really can't plan for taxes. We really can't have that conversation without getting your reports done. So here we have a great example. Connie's coaching has a profit of $30,000 after 6 months, halfway throughout the year. If she expects the second half of the year to be very similar to the first half, then she can predict a total profit of $50K after depreciation and year-end adjustments. Now, with $50K of self-employment, she's looking at a tax balance of approximately $7,500. And at this point, even halfway through the year, she can start tax planning for that 1 year. She can look at reducing her income tax balance by contributing to RSPs, looking at other strategies like income sprinkling, or what I like to call strategic expenses. It's a conversation I like to have during these conversations with my clients. And it's really combining personal trips or personal expenses with business expenses. So for example, real estate agents are a great example. If there is a real estate conference in Hawaii, definitely go, enjoy yourself. You're able to write off a lot of that trip as a business expense because you are strategically combining personal expenses with business expenses. And I see some laughs here. Some of you like that. But really, that's what it is. And we really can't have this conversation without the ability to look at your reports and see what's going on. Moving on to corporations. Corporations have a very similar conversation for those of you who are incorporated. The conversation is very similar. So I have another example here. DB Tech Limited reviews its third quarter reports and observes $600,000 in profit. Even though it's partway through the year, it estimates that it's going to finish the year with about approximately $750,000 in profit. And at that point, it can start to make some plans to reduce that tax balance. So for example, it may initiate a nationwide ad campaign or a large charitable donation to reduce their profit below the $500,000 threshold to take advantage of the small business deduction, which drastically reduces its tax rates from the normal 38% down to approximately 12.5%. And there are a number of other caveats in that conversation. But this is what tax planning is. We are we're analyzing the reports and then making the necessary adjustments to pay the lowest possible income tax. Because who loves paying income tax? Please raise your hand. Exactly. Now, again, before we get into the analysis here, I'm going to show you some examples of financial statements because I know this is very important, regardless of the business that you're in. Anybody looking to buy a house or looking to take out a loan or anything like that, the bank is going to assess your ability to repay that loan based on your financial statements. And so in my experience, there's been a number of situations where people are not able to prove their ability to repay their loan because they don't have financial statements for the bank to analyze. So, for example, just let me know if you can see this report on my screen here. Just give me oh, perfect. So this is, now I've changed the name of these reports and some data, so just for confidentiality reasons. But for example, this is a not-for-profit in Canada. They are a German cultural club. And so really this particular company or club, and not-for-profits, they own buildings and all financed through the bank. And so this is something that they would show to the to the bank in order to qualify for a mortgage. You can see here that year over year, their profit decreased from 60 down to 53. But they can use something like this to adjust or to apply and assess their ability to repay a loan. I'm going to give another example here. Yeah, so this is another example here. Now we've been talking about tax planning up until this point, but I think this is more important than tax planning, because before we even get to taxes, before we even get to what we owe CRA, this is extremely important, because even before we get to taxes, this is what we're using for management purposes. And so the data analysis I find really important. So for example, this is an ad company here. We can see that year over year, their revenue has increased by 59%, which is great. If we are analyzing expenses, we can see that, subcontractor expense increased by almost 400%. Something like that is a question why. These are things that we can analyze. These are things that we can really dig into to make good business decisions based on, rather than data, rather than feelings or perception of the market. Before we even get to taxes, I think this is extremely important for your purposes as a business owner. Because as a business owner, you want to make decisions based on real data rather than feelings or your perceptions of the market. Going to give another example here. This is a small restaurant in town. Again, year over year comparison that we can analyze, especially for a restaurant. Cost of goods sold, how much is the restaurant making in comparison to their revenue? Here we can see, total cost of goods sold increased by 36%. Did their revenue increase in line with that? It actually increased by 115%, which is great. These are good margins. It's really when things go wrong, and I don't have too many examples of that at the moment, but it's really when things go wrong that you as a business owner can analyze why. And that why is extremely important, because with great bookkeeping, with the details, with the data, we can actually dig in and figure out what happened so that we can improve in the future. Without that data, without that analysis, it just can't be done. And so this is another reason why bookkeeping, why financial reporting is important before we even get to taxes. So jumping back into my PowerPoint presentation. For those of you that listened to the little promo that Tammy and I recorded earlier this week, BBC had put out a tool a couple of years ago. I think it was just prior to COVID, that really allows business owners to compare their financial status or their financial performance to other peers in the industry. So I actually have the link here. But I'm going to pull up that actual website just to give you an example of what it looks like. And again, this stresses the importance of bookkeeping and the importance of financial information. So actually, before we get here, can I, just by show of hands, how many of us are sole proprietors and how many of us are incorporated? So if you're a sole proprietor, raise your hand. Okay, if you are incorporated, raise your hand. Okay. So whenever there's a filing made, there's an industry code attached to every file, whether it be a sole proprietorship or a corporation. And that industry code is used to track basically particular industries and the financial data for that industry. So for example, BDC calls this a benchmarking tool where you as an organization can type in just 4 or 5 details, whether it be the number of employees you have, your revenue, your profit, and the industry, and it will compare the numbers that you've put in with all other industries across Canada. And they use that based on the industry code that you enter when your taxes are filed. And so in this example, I've entered in 10 employees, $1 million in gross revenue, and $300,000 in profit, and the industry is IT. So based on this Canadian benchmarking tool, the revenue per employee is below average, and the profit per employee is within average. So the data isn't very detailed. However, you can download a more detailed report, and they will email it to you, but they'll ask you for some more information just so that they can give you a call and try and sell you stuff later on, just to make you aware. But this just stresses the importance of financial data, right? Because it's not just for you. The government uses it to measure industries across Canada, and really we're all small business owners here. And I was really amazed when I learned that small businesses really are the backbone of the Canadian economy, because small businesses actually make up for 80% of the total employment in Canada. And really that is businesses that are smaller than 10 employees. So that's huge. We think of huge companies like, Google, Amazon is huge. As large as they are, the real backbone of the economy is still small businesses where they employ less than 10 people for the company. So kudos to all of us who are small business owners. We're really carrying the Canadian economy here. And so going back to my presentation, I really love these quotes. We treasure what we measure, and what we measure, we improve. So really, what are we measuring? As we go throughout the year operating our business, regardless of what industry we're in, what are we measuring? Are we actually measuring what matters? And of course, our bottom line matters, but it doesn't only matter at the end of the year. It makes sense to track that along with other data throughout the whole year so that you are in the know. Another quote earlier in the presentation said that if you only look at your financial statements during tax season, you're really operating throughout the year blind. If you're only looking at it once a year, you're kind of operating throughout the year blind. So I really encourage everyone to take a look at those reports throughout the year rather than, 3 or 4 times a year, rather than just at tax season, because you could be really missing out. Let's keep it moving here. So we spoke about reports only, and that's, this is what I just mentioned, reviewing the reports only once a year. You're really operating throughout the year blind. Planning for taxes should not just be a big task in spring. Efficient tax planning occurs throughout the year, not just once a year. Now, when it comes to how do we track that information, how do we track the financial data of our business? There are a number of software out there. Here are a few: Sage, FreshBooks, QuickBooks, Xero, Waze. Excel kind of is the backbone of it all. And so really doesn't matter what you do or what software you choose, or maybe you don't use software at all. Excel can do it. And so what I recommend is, first of all, give me a call. We can assess which software works best for you. But if you're just starting out, or if you feel you don't need accounting software, which a lot of people don't, FYI. You don't need accounting software right off the bat. Excel can do it all because Excel is actually the backbone of all accounting software. And so what I recommend is if you use all of your, if you put all of your business transactions on one bank account and or debit card, at the end of the year, you can, or not at the end of the year, but at the end of the period, every quarter or every 6 months, however you see fit, you can actually export those transactions to Excel. And then we will actually use that same Excel file to create your income statement and balance sheet, which will look the exact same as the reports that I showed you earlier in the presentation. So accounting software like Sage, QuickBooks, Xero is not completely necessary. I do suggest it after you reach a certain level of transaction volume, but really it's not necessary. You can do the exact same thing in Excel by just exporting your business transactions from your online banking to Excel, and that's the same file that we'll use to create the same reports that I showed you earlier. So in conclusion, we did talk about taxes and tax planning, which is great. But before we even get there, just the ability to look at your financial statements and really analyze them, think about them, and understand what they mean for your business versus now, in the past, or in the future, because really we can use the current data to plan for the future. It's extremely important. And I highly recommend looking at them in detail at least 3 times a year, especially quarterly. If you are on a quarterly GST schedule with CRA, I highly recommend analyzing and just really digging into those reports to make sure that they are accurate, first of all, before you file a CRA. And then secondly, just for your own management purposes, see how things are going, compare them to previous periods, and really use them to plan forward into the next period so that we can grow. Because really, we all want to grow, we all want to do better, and analyzing the data is just part of that. So I encourage you not to operate blind throughout the year. Think about your reports regularly. Even just take a look at them, glance at them, complete them before kind of moving on into the next period or the next chapter of your business. And so obviously I'm going to open it up for questions now if anybody has any. And again, I love this quote: failing to plan is planning to fail. And so if you're not planning what your next step is, if you're not planning how you're going to track what you measure, then you're kind of planning to fail. So I really encourage everyone to, now that we've, seen this presentation and we're thinking about, our own financial statements and what they mean for our business, what are we going to do next? So I would like to open it up for questions.